Thank you, everyone, for joining us to our webinar. We will be presenting and offering on our projects in Lafayette, Louisiana, specifically the Moulin in Broussard. I want to make sure that you guys know this is a private, that it's your responsibility to do your due diligence. It is not our responsibility, it is your responsibility. And that was just because our attorney told us to say so. A little bit about us. We've been in business for quite a while. I've been in this game for about 30 years. Our team here has got some gray hairs, some young guys. Our mission here is really to transform as many lives as we can through real estate in the communities that we develop and own across the country. And it's been, our privilege over the last few years to really see raw land turn into actual projects. A little bit about our team and our track record. I myself, as I mentioned, have been in this game for 25 years. I started off in real estate brokerage for the first few years of my career, and then in development, property acquisition, ownership. Andrew G. has been a founding member of MAG Capital, which has a $1 million fund as well. They own and operate a number of real estate projects. We worked on 4 projects together. Chris Vaught will be with us here today, and Derek Alexandrenko. They've been developing projects and entitling projects in the Southeast for many years. Before even built to rent became a trend, these guys were out figuring out opportunities to turn raw land into actual homes that people could live and enjoy and thrive. Here's a little bit about us. You can see that quite substantial. 1.2 billion assets under management. Sometimes when you say it, you feel proud, and then you realize how old you are, how long you've been doing this. So it's really not that impressive when you think about it. But quite a few apartments developed, quite a few SFR units developed, single family rentals, and quite a bit of experience and lines on our face to show for it. Here's a little bit of a video that we'll be showing on our existing project that we've got in Lafayette, Louisiana. We've built about 100 units. It's pretty incredible when you think about it. We started this project about 3-4 years ago, really kind of started discussing the opportunity longer than that. Built to rent we'd been kind of looking at for quite a few years before. And so to see this project in completely raw land and dirt, and all of the iterations from just turning this into actual homes that people live in. We currently do have some of the project completed now, and we've got about 70 of the units under construction in one phase or another. Really proud of it. We had a community event not too long ago. It's really incredible to see where this started as and where it is now. I'll tell you just a little bit about why we like built to rent. I think the biggest factor for us is just really simple. Low supply for housing in general, and depending on who you listen to, we're 5 million to 2 million, if you want to say, on the very on the very low end of just undersupplied units. The other factor I think that's really important for us to consider is just the gap between how much people are paying for their mortgages these days and how much they're paying for their rents. So the gap when we kind of first started this project was maybe 5, went up to 1,000. Now it's almost $2,000 difference. So when you think about that, people that wanted to potentially buy are more now compelled to rent. Even ones that can rent, they love the new stuff. And as a result, it's not just us. Wall Street, Smart Money, and quite a few other large institutional investors have come in. Even those builders that were just doing home building have now come into the build to rent space. So that's kind of why we love build to rent. Simple investor benefits. What does this mean for you? It just means that it's a much more stable class, right? If you think about where multifamily is today, think about build to rent. That's what it will look like in 2030. Instead of having just an apartment, you'll have homes with detached from their neighbors, with their own backyards, their own barbecues, their own amenities, and their own walking trails for the dogs. That's the kind of communities that we envision. And so if you think that, Wall Street controls 50% of the multifamily space and all the money that pours into it, that's where built to rent is going to go. And now if, we only have a small portion, maybe 2-3% of that owned by institutionals, we're in the very early innings of this, and it's already making a ton of sense for investors. Just a little bit about our process. As I mentioned, when we talk about raw land, we start from the very bare bones of turning dirt into roads, into sewers, into the landscaping. Chris Vaught's on this call. He's worked for countless hours in the kind of art phase of these projects, which is the land acquisition, talking to the city officials, making sure that we get all the approvals. Typically, what we'll do in our projects is we will option the land, go through all of the approvals, have all of the city hearings, then purchase the land with our own money, and then we'll bring this opportunity out to investors or private lenders. And that's kind of what we're looking to do today. We've already done all of the artwork. Now we're in the phase of getting ready to build the streets, roads, utilities, and that's kind of what we're raising capital for. This is some of our projects that we've got currently in the Lafayette market, not but 15 minutes away from the current. Yeah, so let me turn this over to Chris Vaught. He can talk a little bit about the market. Chris has lived in this area for most of his life. He went to school at LSU and has been working in this Lafayette area. So Chris, if I could turn it over to you, maybe talk a little bit about the market, that'd be great.
Yeah, absolutely. So Lafayette, as you see here on the screen, it's centrally located, south central Louisiana. It is a hub of a region called Acadiana, and it's a healthcare hub. It's traditionally been an oil and gas support industry hub as well. Over the last several decades, it's been, absorbing a lot of retail employers coming in, and a lot of population growth is all consolidating in the Lafayette area. We've grown exponentially over the last 15 years with new regional builders coming in, national builders building residential, a lot of new employers. Lafayette, about three decades ago, set out to put a city-owned fiber network in that attracted about 10 years ago several software companies. So Lafayette's made a strong push to diversify its economy and really sort of help keep some of the college grads that we have coming out of locally of LSU and Baton Rouge. We've got UL here in Lafayette. To try to not have the brain drain, as it's called, and kind of keeping some of those jobs here. So they've made a really strong push to get a lot of attractive jobs in and around the area. This project specifically is in Broussard, which is east, sort of southeast of Lafayette, the city. It's within Lafayette Parish, and is near a city called Youngsville, which is sort of a bedroom community. Youngsville's seen unprecedented growth, accounts for a lot of the growth in Lafayette Parish. Broussard in particular is very strong in job growth. And so the housing's now starting to follow the jobs that have shown up. And just about 5 miles down the road from where we are is a large retail hub for the region as well, where we've got that Whole Foods, Costco, Topgolf, Dave and Buster's, those sorts of things. But yeah, so we feel really strongly about the location. It's in a great location access wise. We have the I-49 corridor is being engineered now to connect right through Broussard, and we are just off of one of the exits on Moulin Road, which we don't have on a map here, but it's easily accessible and a prime spot for growth.
If I could just jump in real quick, Chris, I've always been told in my many years in this biz, if you get a sports complex and you get a Whole Foods and you get now the latest version of that is Topgolf, then it's a pretty sound market to invest in. I'm also reminded of the Youngsville area, which is that community that we'd be servicing. People that aren't familiar with it, please look it up because it's often on the list of best places in the entire country to live, and that would be a market that we're servicing. So just wanted to throw that in. Please continue.
Absolutely, and I'll jump in on the sports complex thing real quick. The sports complex in Broussard, located not far at all from the project site, is the host of the state championships for several baseball leagues in Louisiana. So we have a lot of statewide traffic that comes in several times throughout the year, right down the road from where we are.
Well, so now with all that information about the market and the team, let's jump into the opportunity. The current state of the project is that it is entitled and shovel ready. So the entitlement was done without any investor capital at risk. We bought the land with the necessary entitlements. Now we've completed engineering and environmental as well, and we are ready to build the first phase, which is going to be 93 units. So we're ready to start horizontal construction here in the next month or so. And that's going to finish conservatively by May of 2026. Once that's done, we're going to begin the vertical construction and the unit build out of those 93 units. And that should be done by June 27th and completely leased by January 2028, 3 years from now. So these are some 3D renderings of what the Moulin is going to look like. So we have a lot of our amenities are going to be, the pond in the middle, walking trails surrounding it. This is going to be a gated community. There's going to be an amazing playground, clubhouse, pool, grill area, all that good stuff that you'd want in a community, family friendly, pet friendly, all that good stuff. And these are actual pictures, not renderings, but actual pictures from the Crest, which is the community, the video that we saw earlier in this presentation. This is what the interiors look like. So this is what our partners, Chris and Derek, have been building on the ground. High quality finishes, amazing modern interiors. And this is the kind of interiors that you can expect in the Moulin as well, this community we're building on the other side of town. So to build the infrastructure here for these 93 units, that's going to cost us about $5.6 million. And here's a breakout of some of the big line items. About $2 to $2.5 million of that is going to come from a local bank, and the remaining $3.1 million we're going to be raising from you, our amazing loyal investors. And for a more detailed breakdown of the financials and the financial modeling, you can find that in the investor data room, which you'll get a link to. So these are some of our comps. Our team was there in town just a month ago touring our Crest community. So they went and shopped some of the nearby comps as well, just to make sure that they were in line with what we're building here at the Moulin. So I've included some more information about that here, as far as rents, square footages, amenities, all of that good stuff. The comp that's closest to us is the Sweetwater Point Cottages. That's another built-to-rent community that's going in, and you'll see that we are right in line with the market. They're achieving those rents right now as they're leasing up. We're projecting these rents 3 years from now, once we're completely built and leasing. So the risk mitigants for our horizontal phase, as I mentioned earlier, the project is already shovel ready and no additional utilities infrastructure is necessary. One problem that we ran into with the Crest is that we had to, out of nowhere, it was a surprise, had to build a sewer plant in the community. So that actually delayed some construction with that community. No such roadblock is going to be hit here. We're ready to go, and our goal is to conservatively finish horizontal construction within 18 months. We think we can do it within 12. We're pretty confident there, but just to be on the safe side, we're budgeting for 18 months. We're being pretty conservative with our leverage as well, accounting for just 50%. If we can get higher, that's great, but if not, again, we just like to be safe rather than sorry. We've also included cost contingencies, both on the construction side at 5%, and then again, at the project level, an additional 5%. So, we have basically 10% of buffer room on our costs, in addition to the timeline contingency I mentioned. So what is the investment opportunity? This opportunity, again, not public, just private, is available to all investors, both accredited and non-accredited. We're offering $3.1 million in private loans. And what that means is there's two options that you can pick from. Option one, if you invest between 50 and 250,000, we're offering 12% interest annualized for a 30-month term with no prepayment penalty. And interest payments are going to start quarterly as soon as we raise the money. And you will have the option to reinvest your dividends and compound them. So you'll have the option, let's say you invest $100,000. Every quarter, you can either choose to receive $3,000, or you can choose to delay that, keep it invested in the project, and then now that $3,000 you're going to get, now that also starts earning 12% interest. So it's a great way for you to compound your returns.
We've listened to our investors. We've listened to the people that have helped us get through many of these projects. In many cases, they invested for development projects where they were accruing returns and paid handsomely at the end of the project. But we've kind of sensed that many folks now like the idea of receiving a cash flow quarterly payment. And as a result, we started to create these private loans, and that seems to be a much more appealing strategy for some investors. They sit right atop the debt stack, right above the primary loan. They're paid first, they're paid frequently, where interest rates are. That's a pretty handsome return. For us, it's a little bit easier to raise for, so we can move quickly on these projects, and frankly, it's a little less expensive for us to pay on the back end high IRR returns.
Thanks, Andy. It's definitely a win-win. And for those of you coming, strictly from the stock market world where you're used to seeing what the value of your investment is every day, it will probably help you sleep a lot easier, knowing that you're going to get paid every quarter, that you're going to receive that interest payment like clockwork. Again, that being said, if you want to compound your returns, we do offer the opportunity to reinvest your dividends and have that 12% growth compound. Option two is if you invest $250,000 or more, we love our larger investors. We want to reward you for taking that additional leap of faith with us. So we're offering 13.5% interest annualized, same terms, 30-month term, no prepayment penalty, also with the option to reinvest dividends. Our goal is to pay investors the loan balance, your principal back, once the homes are built, leased, and refinanced within 30 months. And these loans are backed by the personal guarantees of our high net worth operators, Andy here on the call, Derek, who is not on the call but was mentioned on one of the earlier slides, as well as Andrew G. And we accept not only your typical cash investments, but also IRA retirement funds. The stock market's doing exceptionally well right now, but we saw what the news of DeepSeek did to rattle investors in just a day. So if you want to take some chips off the table, diversify your retirement funds, then you should definitely explore self-directed IRAs, SD IRAs, as that's an amazing option to reinvest your stock market earnings, diversify outside the volatile stock market, and get into some amazing real estate backed investment opportunities. So reach out to us if that's something you're interested in. And if you're investing $500,000 or more, definitely reach out to us personally, and we can happy to work out something where it's the best of both worlds for everyone. So some frequently asked questions that some of our investors have already sent our way, just because we've been discussing this opportunity with a lot of people and have frankly received a lot of great feedback, is how are we being conservative on the vertical unit build out to ensure a successful refinance of the homes once they are built. So remember that your loan balance is being paid back once we refinance the homes. We obviously want to be conservative in our ability to be able to successfully refinance and return our investor capital back to you. So in addition to the horizontal risk mitigants I mentioned, additional risk mitigants we have on the vertical is an additional 5% construction contingency there, as well as a 5% project contingency. So even on the vertical, we'd have to go 10% past our current cost to risk, any cost overruns. We are also assuming a pretty conservative exit cap rate of 6%. whereas we've typically seen build to rent trade higher than that because, well, lower than that, but at a higher valuation because it's new valuable product. And we're also budgeting for a pretty high insurance rate in current market rates. If it comes down, it's great, but we're assuming that it's going to be just as bad as insurance rates are right now. And we're also budgeting for $300 per unit per year for additional expenses that come up, broken AC units or doors that need replacing, etc. And if you could speak to both a consent and pocket judgment, which additionally adds more backing and guarantees and safety to the private lending, as well as what our experience has been paying back our private lenders.
Yeah, absolutely. And before I do that, because I think it's probably something that comes up a lot in the conversations, is we're investing in Lafayette, Louisiana. People think of that as a bayou. They think of that as the swampland. And I just want to reiterate that we do not build in flood zones. So that is not an issue. In every market, there are risks, right? I'm in California, and many folks in the LA community lost their homes, some that I know that weren't insured certainly to the value of the home. And so now you're relying on FEMA and many other organizations to kind of help bridge the gap. But outside of acts of God, I just want folks to know that this is an area Chris Vaughn and Derek have not had much more than batten down the doors so that or the windows, and making sure that a couple of roof shingles fall off, but there has not been any damage in these communities. So I just want people to kind of consider that. A consent judgment is germane to the investor that's going to be privately lending the money. So in the event that we defaulted on paying your interest, rather than sitting in court and fighting about how you would get paid, we're actively using what's called a consent judgment or pocket judgment. What that means is that with the personal guarantee that the GP partners are making, this will accelerate your ability to get paid back. So it's basically another kind of it's more teeth for you to dig in the event that we defaulted, which really gets to my second point. We have not defaulted on any of these private loans that we've ever made. Certainly, we haven't had every deal go well. I'm not one of those folks that say, "Oh yeah, we never had any problems. We never had any delays." We've certainly had to pay investors out of our own pocket in order to bridge the gap. So certainly not perfect, but we have not lost investors' money, and we have not been in a situation where we have not been able to pay back lenders. So maybe a little long-winded there, but I do want to stress that fact. That record we are very proud of.
Yeah, so I would say to wrap that up, in addition to the risk mitigants that we've mentioned, both on the horizontal and vertical, in the highly unlikely event that it does get to, having to recoup your investment another way, you have some additional assurity there as well.
Yes, so let's just kind of quickly recap. We would like to be bringing this capital in as soon as possible. We do have some funds that are coming in. We will say that the 13.5% has been a product that people seem to like. So I would suggest that you try to at least reach out so that we can get you in the InvestNext and submit your soft commitment. All of the packages are available. If you'd like to review any of our financials, that is certainly possible as soon as you're ready. And then we need to have these funds in order to keep moving by the 8th of March. So that's our due date there. We will begin that construction on the 15th. You can go ahead and scan or email or call. Would love to just hear from you, just any feedback about what you're seeing in the market and whether this is a product that seems to suit you. We've tried to listen to what you guys want, and what we keep hearing is, I want to be the bank. And if you want to be the bank, if you want to be the one that's collecting those wires every quarter, then this seems like this might be a good fit for you. Thanks everybody for joining us. Appreciate y'all.